saw Bitcoin. I wrote the first ever macroeconomic strategy paper and valuation for Bitcoin. I've been all over this space, and the one thing when I wrote that first article is you need a 10-year time horizon. Everything else is done, and if you're worried about these cycles, you're trading it wrong. You're doing your trading and not investing in the adoption of a network. So how does crypto work? Crypto is driven by two things. It's really simple. Network adoption, which is Metcalfe's law, so that's the number of active users, plus basically the number of connections or applications for those users. That is what drives the long-term trend. The log trend of Bitcoin over time is the best performing asset of all recorded history, and it remains so in every single up business cycle. There is no asset that's ever performed as well, but it is cyclical, driven by the money supply and the liquidity sign the emotions, and that's what brings it down 70 to 80%. So when it comes down 70 to 80, you've got to remember that if I look at the Bitcoin chart now, the low in 2015 was $200. Then it went all the way up to $20,000, and then it corrected down to $2,800. All the lows are massively higher, and the highs are massively higher, yep. So if you just step back and say, oh, I bought crypto and it fell, hold it. Your time horizon cannot be 3 years. Your time horizon needs to be long enough for the network adoption model to work, and the best way of doing that is just using a log chart and looking at it within that, and it's that very smooth uptrend. And then what you do is you learn to use the down cycle, the liquidity cycle, to add to your investment over time, much like you would have done with Amazon, or you would have done with Google, or you would have done with Microsoft. They're very similar models. Don't forget Amazon back in 2001, it fell 90%. Despite the current crypto winter, institutions are still coming for Bitcoin, and crypto is the message out from Real Vision CEO and founder Ron Paul. Ron argues that the growing exposure of big institutions to Bitcoin and other cryptocurrencies holds significance for 5 main reasons. Firstly, cryptocurrencies provide institutions with a new asset class that can diversify portfolios and potentially yield higher returns. Secondly, cryptocurrencies are built upon innovative blockchain technologies that have the potential to revolutionize various industries. By embracing cryptocurrencies, institutions can stay at the forefront of technological advancements and seize new opportunities. Thirdly, cryptocurrencies grant institutions access to untapped markets and customers, especially in regions with limited or inaccessible traditional banking services. Fourthly, cryptocurrencies have the potential to enhance institutional operations by reducing transaction costs, increasing speed, and improving security. Lastly, as cryptocurrencies become more mainstream, customers increasingly demand that institutions offer cryptocurrency services. By embracing cryptocurrencies, institutions can meet this demand and attract new customers. Overall exposure to Bitcoin and other cryptocurrencies can provide significant benefits to big institutions, including diversification, innovation, access to new markets, and improved efficiency. This is why Ron argues institutions coming for crypto is an inevitability in his latest interview. Ron Paul discusses his latest thesis for Bitcoin and the broader crypto space in 2023. Before we delve into Ron's extensive range of insights, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video, so it's free and you can always change your mind. I don't think Bitcoin will be a payment system, except using the Lightning layer for moving dollars around, so it's fine for that. It's fine if you're PayPal and you're in the monetary system because you give people a different product. But nobody wants to be the Bitcoin pizza guy and buy a couple of books on Amazon, in fact, Bitcoin, and then realize because the Bitcoin goes up too much over 2 months, it's too volatile to do that with. So I know it seems fancy that there is a Bitcoin and ETH economy, and you can get a share of that economy, and that economy can do very well. So, we take payments in ETH or Bitcoin or whatever at Real Vision, that's fine. Some people want to do that because they've accumulated a lot of capital in those particular assets. But generally speaking, it's a bit of a red herring, I think. For that, Ethereum itself is becoming the payment system of the internet. It's very interesting because it is a base currency of which we quote things like NFTs in ETH itself. I've never seen that in my life. So my big thesis on crypto is, I've started 2 companies. One is exponentialized asset management, that's for investors. To invest in digital asset hedge funds and other vehicles to get exposure to the space, so the financialization of the crypto markets, whether it's family offices, high net worth investors, pension funds, sovereign wealth funds, all of that. Sound Magic Studios was the other side of that equation, which is, I look at a lot of Web3, and it's been built from the grounds up, and they're all experiments and will fail. Some will work great. But when I look at what Web3 does, it enables a bunch of really, really big intangibles on a balance sheet. Culture, brand, community, to become tangibles via tokenization. So I always use the example of Disney. Disney probably has the largest cultural brand on earth now. Yeah, it might have been Coca-Cola in the 60s, but it's not now, it's Disney. What is Disney's brand, community, and culture worth? $1 trillion, $2 trillion. It's worth a lot more than the company is. Now, it's not realizable, but when you tokenize it, it creates that science. Magic Studios' mission is to tokenize culture. These large cultural communities, music, right? Music is one of the biggest cultural phenomenons of our human activity. Sports, gigantic. Fashion, gigantic. And then on top of that, entertainment, whether it's film franchises, book, TV, all of these things have cultural currency that can be tokenized. So the idea of that, we built up an amazing team with some credible advisors to go and talk the talk that needs to happen at boardrooms, not by a bunch of crypto heads with hoodies, but serious people to go in there and explain how we can unlock massive trap value for these massive communities and drive forward this whole space business model towards the global 1,000 companies and what they should do and how they should partner up. And as long as they've got cultural relevancy, of course. So if you don't have it, you don't have it. Yeah, you can't tokenize. But if you do, and we've seen this, the fashion companies coming out of, LVN8, they've all started experimenting with this. We can see it happening in the music industry too. Fashion, yep, it's all there. So this is going to be very big. And even through this, what we call crypto winter, the brands are still interested in this because they're thinking, okay, what this allows me to do? In addition to turning it into a tangible on the balance sheet, it allows me to have customer loyalty in a way that the alignment of incentives makes it a very powerful network effect, because your customers, by owning digital assets from your ecosystem, will appreciate in time, or they can accumulate more of them by being good community members and now passionate behind your brands, much like kids trade Nike sneakers. So they're thinking, okay, this is going to make people more loyal and we'll have a direct relationship with our community or buyers. By doing this, therefore, we can collapse the costs of using middlemen like Google and Facebook, etc. at the middle too. I've spent a lot of time speaking to these guys. I've done a Google talk to the entire Google team and spoke to everybody from LinkedIn to Amazon to Google to Meta to everybody. They all get it, and there's a great crowd of people in those companies who are really smart and pushing for change. But many of the senior leadership also agrees, but they've got the problem of how to disrupt your business model without crashing the poorly earning golf, yes. But they do get it, and I think they will transition. Now, Meta has just taken a step back, but again, I know the people there. They're good people. The fight is not over. AI is going to impact every single industry that's based around knowledge. I cannot stress what a nuclear bomb this is for both productivity, deflationary forces, and the knowledge-based economy. It's going to create huge losers like the shutting down of coal mines, car plants, and steel mills did. There's going to be a lot of people laid off in this cycle that will never get a job again. Yeah, there are two schools that have thought about that, like displacing knowledge workers. There's a whole slew of people like, no, they'll never replace the front-end coder. I'm like, really? Have you heard of low code, no code? We're getting a little geeky here, I'm sorry. But I mean, you look at what's going on. 42% of all code in GitHub now is AI generated, so that's only going to go exponential and accelerate. So we've got an issue now that, at the vertical level, AI, as you know, was better than humans at single tasks, but now it's becoming more generalized, so it's becoming better than humans at all tasks. Lovely story last night. I was having dinner with a friend of mine who's a radiologist, and he's actually the chairman of a hospital here in the Cayman Islands, and he had taken a new NRI for cardiology, kind of a new state-of-the-art. He's trying to figure out this machine, figure out how to use it. Diagnostics, what he's doing, and had a particular problem with a patient. So he's like, I've spent 4 hours yesterday trying to figure this out. It's a whole new skill set for me. And I said, kind of how much is per dollar is your hour? He's like, I don't know. We worked out maybe it's $300 an hour. So he's like, he spent $1,200 on researching how to just give one outcome for one patient. I said, have you tried ChatGPT 4? of which it came out in 30 seconds, the whole thing. And it's like, oh my God, this is more information than I have learned than I know, or I could even find, right? And that was a fraction. If I price it out, it probably costs about 1 cent versus his $1,200. I mean, that is the level of deflationary. So what we're doing here is humans have imagination, and humans put it into action, whether it's businesses or anything. And in the middle of that is lawyers, accountants, and knowledge workers. We collapsed it all down so your imagination can be a text prompt, or soon to be a voice prompt, and it will create video, audio code, anything for anybody. So it's impossible to overstate the importance of AI. It is possible to overstate where we are in this cycle. We've just gone through this ridiculous acceleration phase, and we will probably end up with a bubble, which will probably unwind. But still, like crypto, the adoption of this thing is absolute and total, and it drives what we talked about before the Roaring Twenties and a Renaissance, because it's going to unlock enormous amounts of power from people, businesses, and who knows. Well said. Yeah, most people misunderstand bubbles. It's usually just the spark, the igniter that starts the next wave. Of course, there are too many companies that get into it. That's called the entrepreneurial movement. That's what we need. But, yeah, I'm more in the camp of what it can create. It can create companies and industries that we've never thought of. It's not just getting rid of accounts and lawyers, though. That's always good cocktail party talk. Just a little tip. So just to take us out, yeah, just give us some, what should some of the big brands out there and startups be looking at in terms of, the next as we head to the 2030s here in the next 5 or 6 years? Look, I want you to rearrange the given paragraph into sentence case. Yeah, because a lot of what is going to come, it's not been built yet, or if it is, we don't know about it. Now, what is clear is Microsoft, Google, and others will capture a lot of this wave. I mean, the stuff that is hidden in Google X is enormous, from robotics to biosciences to AI. So, Microsoft has become ultra-aggressive. For a non-aggressive company, they've become probably the most aggressive corporate finally. So, there's a lot of value that they will unlock. The other thing is pretty obvious if you're an investor. The one thing you need for all of this, every single part of the exponential age, is a silicon chip. So, the semiconductor companies will do very well because they become the gatekeepers to computational power, which is needed. But in companies themselves, I just choose broad baskets of this stuff because we don't know, and so much of this is still early. We don't even know in the biotech space what's going to have the breakthroughs, but we know when you add AI to the human genome, we will solve cancer and all of these things very quickly. When does that come? I don't know, but is that going to be a Cambrian moment just like we've seen with ChatGPT? It's going to literally change the world.